Hey, it's Clay at claytrader.com. This will be an analysis of some of the more popular futures markets out there for day traders. This will be a technical analysis breakdown, so if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. One quick clarification before I get started, and that is I'll be using the 1 hour time frame, meaning if you're new to charts, each one of these candlesticks, as they're called, represents 60 minutes worth of time. So the first market we're going to look at is the NQ, and as a reminder, even if you only trade the MNQ, these charts mirror image one another, so you could still apply what I talked about here to that market too. But yeah, brutal rollover late afternoon. I mean, it was already pretty brutal during that hour right there, but did try to consolidate out, but eventually just the floodgates opened back up, and it has made a very big downwards movement. Now, to give some credit's due, this area that I talked about previously as support at 20,350. There was a minor little violation of it, but so far that is holding, but it does look more than reasonable to think that may no longer hold as support moving forward. So what I'm going to do here is change to the 4 hour time frame, meaning each one of these represents 4 hours, because we're having to go back. You know what? At this point, I'm going to just go to the daily time frame because it has been such a long time since the price has been down this low. So at this point, each one of these lines, or excuse me, each one of these candlesticks now represents 1 day's worth of time. So I'm going to get rid of that, and we can go and see where the next potential area of support may be residing, and that is down here at the 20,050 mark. So that's going all the way back to mid-September. So like I said, we are talking about multi-month lows now that were established after today. So if 20,350 does not quite hold up, no such thing as a guarantee, but I don't think anybody would be shocked at all if the price were to drift down to that 20,050 mark. So those are going to be the two main areas of support headed into the next session. We'll now drop back to the to the 1 hour time frame here. If the price does try to bounce, then the key area of resistance, in my opinion at least, going to be all about that purple line right there, 50 period moving average. And there's definitely some room for it to potentially get a bounce up to that area. But from more of an overarching standpoint, I would still say that this area right up here around the 21,115 mark is going to be a key dynamic. But that's also getting a little bit ahead of ourselves because that level is way up here. So let's just first see if the price can even stabilize out, stay above 20,350, and then it would probably make more sense to focus on that area up there. But even before you put any sort of emphasis on that, again, price got to get back above that 50 period moving average. So yeah, absolutely brutal move down this afternoon, but we'll see if the bulls can try to step in and get some kind of bounce on the next session. Next one here is ES, and like the NQ, just a brutal rollover, but this one wasn't as bad because at least the price didn't come down here and test that secondary area of support like it did on the NQ, but nonetheless, still a big break to the downside, and that's where the first update comes into play, just based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So 58.88 is a key level. What I'm going to do here is actually adjust this level down because I think the level that could be more of a problem point in the very near term right here at 58.55. So 58.55, first initial level of resistance. And then like NQ, you'll want to keep an eye on that purple line right there because that is a moving average, meaning that line is going to move itself lower and lower, get more and more relevant as time goes by. But that'll definitely be the secondary level. But in the very near term, 58.55, key battleground. And then in terms of areas of support, down there at 57.94 is still out there. And if it gets tested, will it create a bounce? I don't think anybody would be shocked by that. But again, there are no guarantees, and that's why risk management matters. But yeah, right now, just pretty much straight down. And the top priority right now, and really top question is, where does this bleeding stop? Where does it maybe at least try to go sideways? And then, do you get some sort of curl back upwards? But if so, again, keep your eye on those levels of resistance. But yeah, a whole lot of downward pressure right now. Next one here, the YM, which is for the Dow Jones and just mirror images. So once again, now I will say this, at least the Dow Jones held above both of its areas of support. NQ was basically down through both. ES was just only down through one, but the YM here has maintained above. Now, granted, at one point during this hour, the price was down below there, but it did recover back upward, so that's good. But moving forward, the price is still above those areas. So of the three, I would say that the YM is looking the strongest. But again, that's a pretty low bar because this is still looking very weak with a big move to the downside. But nonetheless, moving into the next session, 43,165 and then 42. 910 are going to be the two main areas of support. In terms of levels of resistance, I'm pretty much back to broken record at this point. Yeah, just keep an eye on that purple line right there. 50-period moving average as the time goes on, and that line works its way downwards. I think that's going to become very relevant. And you also want to watch that pink line up there, but one hurdle at a time. The first main hurdle, like the other ones, is not even necessarily going up, but can the price at least go sideways? Because if the price at least goes sideways, then you can start to make an argument that, okay, maybe things are stabilizing. But as of right now, it's hard to make that argument because the price has literally just been dropping essentially straight down. So yes, a lot of bearishness to start the week. We are now moving into the oil market, specifically crude. So taking a look at CL, and CL had a very, very rough session here. Really just, I didn't mean to say really that many times, but in all actuality, just a extra rough 60 minutes right there. I mean, that's where the majority of the drop came, because if you think about it, before that candle, yeah, it had dropped, but it was still doing a good job holding above that area of support, which was right here, which was right here, which was right here, which was right here. But wow, when that level failed, boom, that's where it opened up those floodgates that much more. So that's going to be, really something that has rearranged pretty much the entire chart in and of itself, because now you have new lows and just a whole lot of bearishness with that drop. So let me change that to green to represent support. So 67.88 going to be the initial level, and nothing fancy behind that other than just a very basic logical question: where did the bleeding finally stop? And the bleeding finally stopped right there. Therefore, that is an area that I would say to keep a close eye on. If it does try to bounce, then the initial area of resistance is just going to be that former area of support right there around $69.20. So keep an eye on that. In the very near term, and even if the price does bounce, you still got to be careful, because any sort of bounce like that, yeah, it would be giving you an upwards channel, but when you factor in what occurred beforehand, and that was this, you'd actually just have a bear flag pattern. Now, just because something's a bearish pattern doesn't mean it's going to go down, but my point is, just because something is working its way upwards, I would still be skeptical, because all that's essentially doing is building a bearish pattern. But all in all, a lot of downwards pressure, right on like everything else, and just one of those where we'll have to see how the dust begins to settle and see if there is any sort of consolidation that suggests maybe a curl back upwards. Now we're venturing into the world of precious metals, and specifically looking at gold. So taking a look at GC, and mapped out this trend line in the previous session. Price did come above it, came up here, got rejected right off that purple line, as I talked about you'd want to keep an eye on. And if you don't believe me, I'm not offended. All you got to do is go back and watch the previous futures video. But then came up here and broke through there, and a very nice move. So gold is apparently regaining its footing here, and now it's just a question of, can it continue to build upon this? So in other words, how can we measure whether or not this move is still healthy, or if it's maybe running out of strength? And no need to overcomplicate it. Just getting a good old-fashioned trend line in play can be very helpful. If you prefer not to use a trend line and you just want to use a moving average, that works too. In other words, as long as the price now begins to stay up above that purple line, that is a good thing. That'll cause this purple line to curl back upwards, and then all of a sudden start to trend in the upwards direction. So like I said, leave that up to you in terms of how you best feel comfortable monitoring the strength of the upwards move right here. So trend line or the moving average, you can use both. Totally up to you. In terms of battlegrounds now moving forward from resistance standpoint, in the nearer term, got an area right here around, let's see, what is that? About 29.06, which looking back here, you can see was a problem area, and sort of was a problem area already, but if the price can push up through there, then the next key overarching level, not until up there, that pink line, which is the 200-period moving average. But all in all, anyway, look at it. Nice recovery, nice break of that trend line. Now it's starting to grind higher and higher, so we'll see what the week has in store. So that wraps up the analysis, and hopefully you saw the link that at the top of the screen the entire time, but that is for Take Profit Trader, and I would highly recommend you give them a try, especially if you're either looking to get in the prop firm world or maybe you're already in it. They offer very fast payments, and they offer just a lot of good structure, and they offer what I would say is a quick way for people around the world to get access to the USA markets. Now, if you do see your country on that list, unfortunately for you, they would not be an option, but if your country is not on that list, that's a good thing. So if you don't see your country on that list and you want to get access to the USA markets, then they would allow you to do so. So make sure you use that link and take advantage of the current deal, which is 30% off, and then they don't make you pay the activation fee, which is a $130 value in and of itself. So a good solid deal occurring right now. As far as these analysis videos are concerned, as always, if you appreciate these, if you enjoy, hit that like button, and if you're looking for a very easy way to support the channel, please hit the subscribe button. Thanks for watching. Take care.